Tesla's stock price finds itself at a critical level near the 230 to 35 level. On a bigger picture, this happens to be a monthly uptrend line, which was resistance, now support, support, now support once again. Before we continue with analysis, let's look at this article. It's coming from Reuters. Tesla may keep cutting prices in turbulent times, Musk says. CEO Musk signaled on Wednesday that it could cut prices again on EVs in turbulent times, even as his all-out price war on automakers rivals squeezes the company's own margins. The company has slashed prices several times in the U.S., China, and other markets since late last year, and increased discounts and other incentives to reduce inventory as it tries to shield against competition and economic uncertainty. So the last time they cut earnings, which was early this year, and when they announced earnings, price sold off because of margins. One day it seems like the world economy is falling apart. Next day it's fine. I don't know what the hell is going on, Musk told analysts on a conference call. We're in, I would call it, turbulent times. The large price cuts have pressured Tesla's automotive gross margin, a closely watched indicator in the industry, but Musk has said Tesla would sacrifice margin to drive volume growth. Tesla's quarterly automotive gross margin, excluding regulatory credits, fell to 18.1% in the second quarter from 19% in the first quarter, according to Reuters calculations. That was in line with street estimates, but a far cry from the 26% it reported a year ago. Tesla reported overall gross margins of 18.2% for the April to June period, the lowest in 16 quarters. And so this is a graph of the margins as they are focused on getting their cars out there. Lower pricing, along with government tax breaks for EV buyers in the U.S. and elsewhere, drove Tesla's deliveries to a record 466,000 vehicles in the April-July period globally, but it ate into profitability. All right, so let's get into this video coming from Bloomberg before we continue with the analysis on the charts.
I thought we'd sort of put this anxiety to bed, some sort of agreement between the key players in China that they wouldn't keep cutting prices, but it seems they have to.
Just a resolution too, but Elon's hard to predict. But here's what I think is happening. Every automaker in the world is going all electric. Tesla has a cost advantage over everybody else. They're simply put trying to grab market share. What American investors, I think, often don't understand is not only China, the largest auto market in the world now, you've got to win China if you're going to be the global winner. Tesla's being very aggressive. Interestingly, they make 54% of all Teslas made in China today. Part of the reason for that is they can make them less expensively. And I think Elon's trying to take advantage of that price advantage he has as a low-cost provider.
I mean, you say they're going for market share, but BYD is a fierce competitor. Ultimately, does it spell concerns more globally as well for EV competition?
Look, no one should be crying for the Chinese. Of the top 10 auto brands in the world, 7 of the 10 are Chinese. So most Americans are thinking, how are Ford and GM doing? The real smackdown is this. It's Tesla versus the Chinese, with Volkswagen coming in quickly because the biggest seller of vehicles in the world in 2022, they've got deep pockets, global manufacturing. But those are the big three. Everybody else is trying to catch up. So it'll be an interesting battle. What's so fascinating to me is Tesla, really the leader in EVs for a long time, the first ones to connect every vehicle. They've really led the world, not just in bringing battery production in-house, increased robotization of manufacturing, but probably most importantly, really taking the lion's share of and optimizing for over-the-air software. That profit from software sales drops right to the bottom line. That's why the other news piece this morning, yes, you've got is Ford hired Apple's software head to help them figure out their software pricing. They need that profitability.
We're going to bring those details about Peter Stern later in the show. Hey, Steve, let's remind our Bloomberg Technology audience about these specific cuts. It's a $1,900 cut to the 2 highest spec Model Ys in China. So a 4.5% cut to the long range, a 3.8% to the performance spec of Model Y. Those are not the highest volume trims. But if Elon Musk came to you and said, you know what, I've changed my mind again. We're going to cut prices. We'll just keep targeting volume and growth. What would you have said to him?
Well, look, as I know better than most, Elon's awfully hard to predict fellow. But I'm looking at the market here, and I'm seeing Tesla trade down a bit. And I know investors are thinking, gosh, reduce profitability. I think that's short-sighted. Here you have a global battle, and Tesla has a chance to take more territory now, and I think they're doing precisely the right thing. 15 profitable quarters, close to $20 billion in profitability last year. They can afford it. Why not do the land grab now? I think that's what Tesla's thinking, and I think they're right to do it.
Hey, Steve, how's China changed since the time you were on Tesla's board as a priority for the company?
China was not even a speck in the rearview mirror. For the last 50 years, we've all been looking at the Japanese, increasingly to the Koreans. They make outstanding cars. And by the way, Hyundai and Kia coming out with the Iconic, these are great brands. They're going to be part of the picture. But China, simply put, was not in the picture. Fast forward 20 years, what's really changed is electric cars are really better in virtually every way. They're faster, they're better for the planet, they're more reliable. The big fly in the ointment is they just plain cost too much, but the cost per kilowatt hour has gone down dramatically. Think about this, from $1,100 a kilowatt hour down now to about 90. The reason the Chinese are doing so well, one, the Chinese government subsidizes their auto companies, but two, most all of the auto batteries in the world are made in China, and that gives them a competitive edge in battery pricing. The real question is, can the Chinese use their edge in lower cost batteries to catch up on the edge Tesla has in manufacturing and software?
Hey, Caroline, Steve's got a great grasp on the data. He's talking about 54% of production coming out of China, but it raises the question of, well, hold on, what if you cut back in China as well?
Yeah, I mean, when we're looking at a near third drop in shipments for the month of July coming from China. Steve, make this global for us for a moment, because they don't just produce in China. Yes, it's been a key area of focus, but they produce largely in the US, also in Germany. They're looking to expand. How much are we going to see a curtailment of overall production, or indeed a curtailment in overall profitability globally here?
Well, 2 points. One, Tesla loves producing in China because costs there are so low. But you'd be foolish not to be aware of the geopolitical concerns on the horizon. And that's why doubling down on the capacity size in Berlin, expanding capacity in China, and about to break ground this month with a new plant in Monterrey, Mexico. So Tesla's not stupid. They're diversifying. They're going to other markets like Mexico, where they can enjoy the benefits of lower cost vehicles. But I must say, I think Elon, having survived the tough times 5, 6, 8 years ago, where it wasn't even sure the company would survive, is focused like a laser on making sure he has a cost advantage over the others. I think he's going to squeeze a lot of the new incumbents, and I think what you're going to see very quickly is this big global shakeout, again, between Tesla, who's sitting on top, the Chinese were coming quickly with very low-cost batteries, and Volkswagen, which is probably the other Western brand that I think has done the best at modernizing, bringing battery production in-house, and improving manufacturing capabilities.
Steve, very quickly, your reaction to Zach Kirkhorn, the CFO of the last 4 years, 13 years at the company, leaving Tesla?
Well, it's no surprise. Executives at Tesla tend to turn over fairly often. The fact that Zach survived as long as he did is a testament to him. But I don't think it's a surprise. People tend to think Tesla is a one-person company, and Elon may be a visionary, but you got to give him and the Tesla board credit. They built out their executive team. They're playing long ball here, and I think as you look at their revenues this year, I believe they'll crest $100 billion with the highest profitability in the auto industry. Hard to complain about what they're doing. Right now, they look a little smarter than the rest.
All right, so going back to the daily chart, I drew boxes just to kind of represent range and trend. Pretty much price was range bound, broke out to the upside, range bound, broke up to the upside, range bound, then broke down, range bound, then broke down. Again, price finds itself at a key level. You have your momentum indicators pointing down. You have price below the 50-day moving average. You have the 200-day in this band, which represents a 200-day, 200 price psychological number. You have the 100 moving average at 220. Now, pullback is warranted. You have the overall market selling off. You also have the stock zooming higher, 200% from the January lows. Now, it hit this critical $300 psychological round hole number, as that was where we had the shoulders of this massive head and shoulder pattern. Drilling down to the weekly chart, you had a massive move higher in May. So this could be just the pullback before the next impulse higher. But this level got a hold. Because of this massive move higher, you have multiple gaps. All gaps get filled. No one knows when, but they do get filled. So if we break 230-ish, there's nothing really stopping price from moving down to the 200 level. Now, one important thing to note, because of China's woes, they are stimulating the economy, which could be a good thing for the EV market in China, as it's the biggest EV maker. And so that could be bullish news for Tesla. Nevertheless, I don't think Tesla cares about its stock price either. It just wants to get its cars out there. Again, that 230-ish level doesn't hold. There's no reason for price not to continue to move down. Next target being the $200 level. Thanks for watching. Subscribe. Please like the video.